carries risks as well as rewards. From political unrest in Turkey to soaring uncertainty in Mexico, where Donald Trump's tariff agenda has roiled the peso and cast a shadow on the economy. Despite the volatility, BBVA remains firmly committed to its largest market.
We are true believers in Mexico as a country, independent of what you might be seeing or hearing in the next couple of months and years. Mexico is going to thrive.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
When you're in emerging markets, you are in volatile environments, more so or less so. Structurally speaking, we do still have a very positive view in Mexico. On the macro side, because structurally speaking, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates, it complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, you've seen it grow because structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
While BBVA builds on its success in Mexico, it's working to expand its business in other parts of the world, including right at home in Spain. Its proposed deal with Sabadell would push the firm beyond 100 million customers and above €1 trillion in assets.
The Spanish, business is focused on customer acquisition. We see that acquiring customers generates revenues going forward, and that is the focus. Acquiring market share, gaining customers on a digital basis, and continue to improve on our efficiency.
Is BBVA trying to compete with Wall Street? And if it is, how?
I don't think our objective per se is competing with Wall Street. I think the diversification that we have in our footprint provides us with a competitive edge in delivering, I think, what is a unique value proposition in the banking space, which is combining growth with profitability and creating value for shareholders.
It isn't easy for banks to scale in Europe, where barriers to entry in each individual country remain high. Gomez Bravo says BBVA's digital expertise is the key to overcoming those obstacles.
The European story regarding digital banks, Italy and Germany, is a different route, let's say. It's really actually building on the scale that we have in Spain and at a marginal cost, being able to provide banking services, full banking services in Italy and Germany. So it's actually a reverse play on the scale, right? I already have the scale. How can I marginally, at a marginal cost, increase that scale more? And that's the initiative in Italy and the initiative in Germany. So it's a way to compete in other markets, in a cost-efficient way.
Even as BBVA and its European peers scale up, their price-to-book ratios lag behind their global competitors. Along with a boom in defense spending, record buybacks had boosted the sector's stock performance. BBVA has committed to $1 billion in share repurchases.
It almost feels like European banks are taking a page out of the American playbook. Is that fair?
I think the European banks, in general, were underperforming the American banks, and I think there was catch-up to be done there. And I still think that European banks are trading, below American peers when their profitability levels are, much nicer than the way they were before. But obviously there's been a positive trend in the evolution of the European bank stocks. Obviously the rate environment is more positive, and with a terminal rate scenario that you can put at 2% or 1.75%, European banks are going to be structurally positive.
You're still at very distressed PE levels, despite buybacks, despite dividends that we know that BBVA has been kind of putting forward. So how do you combat that in 5 years' time?
No, I think it's about delivery. It's about delivering, such amazing profitability and returning that to the shareholders and investing in your franchise at those levels of profitability.
Coming up, Luisa Gomez Bravo takes me to the trading floor and tells me why she believes BBVA can become an even bigger deal maker.
And the CIB, just like anything else, it really is about talent.
This is Bloomberg.
¿Cómo estás? ¿Qué tal todo? ¿Bien?
When BBVA CFO Luisa Gomez Bravo visits the trading floor, she's in familiar territory. Gomez Bravo began her career in finance as an investment banker, first at Solomon Brothers and then at Lehman, before joining BBVA in 1998.
On your path from deal maker to CFO, you've done a little bit of everything. How has doing a little bit of everything shaped your experience?
I think it's been very important, especially for the CFO role. Why? Because when I was running CIB, for example, that was my previous role, or running asset management, you're running a business. Then I also have done several COO roles in wholesale banking, in retail banking in Spain and Portugal, transformation roles, which help me understand a little bit the functioning of the bank, right? The nitty-gritty of how efficiency works and productivity works, right? Which is important for your CFO role. And I think, last but not least, everything that has to do with investment and cost management, because I was head of investment and cost management. So I think all helps.
Women remain a rarity in the C-suites of large European banks. Gomez Bravo's rise to CFO demanded an extra measure of persistence.
When you're working your career as a woman, sometimes you don't think that what's happening to you is just happening to you because you're a woman, right? But then, with hindsight, you think that, well, maybe there was a bias here or a bias there, and I think we've all suffered a little bit of that.
What do you tell a girl who says, I want to be you one day? What do you tell them?
I would tell her, go for it. Persevere.
Gomez Bravo's roots in deal-making serve her well at a time when BBVA is looking to expand its investment banking business. It increased headcount in the world's two largest financial hubs and expects increased productivity to follow.
We have always been very good and big in CIB, but we want to do even more. We have a very clear plan of 5 years, and that 5-year plan is basically, we are going to be doubling our gross margin coming from the CIB business, but then we will continue. It will continue. I mean, the share of CIB, corporate and investment banking, within our total revenue base is 15%. In general, for other banks, it's around 30%. We are at 15. We have to grow the share of CIB within the total bank.
Some would say, critics would argue, that this is the moment that investment banking isn't doing so well, that deal activity hasn't gotten there. So why is BBVA moving forward in the very industry that people are taking a step back on?
When we plan our growth strategy and investments, especially in the CIB business, it has to be a long-term vision. So, of course, we take into account the volatility of investment banking every year, but we're not growing in a volatile way. We don't hire 1,000 people and fire 500. It's not like Wall Street banks, let's say. So we have a gradual view of growth, so that we don't run into the risk of having to wind up things as we go along. We're structured. It's a long-term story.
Is this step one to scaling up, though? At what point does the hiring yield dividends?
It definitely has, obviously, an impact in your efficiency ratio at the beginning, but obviously your plans are to compensate that with higher growth and the offset. There's always a hockey stick in the investment, but we try to ensure that the productivity is there. But because we started investing already a few years ago, this is a journey, and we are reaping now the profits of investments that we did 2 or 3 years ago.
You talk about the measuring stick a little bit. So in all of these plans, what does success look like? What do you see that says, I did it?
The fact that you are growing your business, that you have competitive advantages in specific spots. We're not competing everywhere on everything. We have, solid positions in Southern Europe. We have solid positions in Latin America, in currencies, in, infrastructure lending, in project finance, and those spots that we've decided that we have the ability to compete, we have a right to compete. And I think the fact that we're doing business and growing our clients and growing business with the clients that we have in a profitable way is the best measure of success.
With rising uncertainty and geopolitical risk, deal execution has become more challenging. But that doesn't worry Gomez Bravo.
I used to say when I was the head of CIB, it's not so much, especially in global markets, it's not so much about the scenario of macro recession or expansion, it's about taking advantage of the volatility. And I think, again, the CIB, just like anything else, it really is about talent. You think about the number of employees in the bank that we have, right? The number of employees in the bank is around 125,000 employees, above 120,000. CIB employees are around 3,000. And with that, you're generating, in a different type of year, between 50 and 20% of the bottom line of the bank. So managing talent is something that, CIB leaders need to develop very significantly, because again, yes, you make a wrong decision in trading, and, it costs you a lot of money, but you need the talent to get you out of that spot.
Coming up, BBVA isn't the only European lender with M&A on their mind. CEO Onur Genç explains why he considers banking consolidation critical for the European economy.
In Europe, unless we solve this issue of scale, we cannot really compete as Europe, and we cannot really grow as Europe.
And Luisa Gomez Bravo tells me what she thinks her biggest challenges are as CFO.
I think that to me, really, it's the speed of change.
This is Bloomberg.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne Rue Hordern in Anchorage, Alaska, and this is Bloomberg.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Willow Bay. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
In case you missed it on Bloomberg Insight.
Now, of course, for the rest of the world, this is a serious demand shock. You will see a lot of central banks contemplating cutting as the rest of the world slows somewhat in the face of these tariffs.
There's a good opportunity for the RBI to cut even further, which would be bullish for the market. These battles with the U.S. on tariffs, of course, is having an impact. This will be short-lived in my view.
Don't miss Bloomberg Insight live weekdays.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
BBVA began its pursuit of Banco Sabadell in May of 2024 and hopes to close the deal by the summer of 2025. If it comes to fruition, it would mark the first completed transaction in a wave of consolidation attempts in European banking.
Some would argue that BBVA and the Sabadell acquisition has almost paved the way for other potential
M&A is
banking
back
deals.
on the table.
It absolutely is. It's the juiciest thing in Europe right now, isn't it?
I think it makes sense that the consolidation, there is a new consolidation waves at the moment in Europe because we are already in a change of monetary policy. We know the ECB is cutting rates. So when banks could count less on, say, the net interest income, the traditional income from the banking activity, then they need to look around and see how this can be somewhat offset or matched. There is also the topic of trying to contain the cost. So one way to adjust the cost base is to merge two similar banks in the same jurisdiction.
Critics say that consolidation limits consumer choice. But banking executives argue limits on growth hamstring Europe as a whole.
Why is consolidation so important for Europe right now in the banking space?
Because Europe needs to grow. Europe needs to grow. I mean, if we again take 10 years, 15 years, 20 years, 30 years, the growth of Europe versus the growth of US or any other geography that you can pick off is so little. You have to grow in Europe. In Europe, different than US, 75% of corporate borrowing comes from the banking system. In the US, it's 25%. The rest comes from capital markets. In Europe, unfortunately, capital markets is too small, so the banks provide the funding. Banks provide the ammunition to invest, to companies to grow. So you need banks, you need strong banks, you need profitable banks. And in the context of the fixed cost becoming larger in banking, you need to be large. In Europe, unless we solve this issue of scale, we cannot really compete as Europe, and we cannot really grow as Europe.
The case against consolidation would be that the larger you are in scale, the more it could hurt the rates and the growth for everyday earners, everyday citizens, for consumer rates. What do you say to that?
We have multiple metrics to show that in different parts of the world, Europe, there's so much competition. Europe is the second largest as EU, as the continent, as the Union, second largest GDP in the world. And in the top 25, there is no EU bank. Isn't there something wrong in this? I mean, so the other countries and other banks in other countries, there's competition there, but they are very large. It doesn't fit. There are many measures to look into competitive nature of our banking markets in Europe, and I fully believe that there is no competition issue. We should let banks grow.
While awaiting approval on a Sabadell takeover, BBVA is pulling other levers, from opening new private banking hubs to expanding its wealth management division.
What we do see is that the wealth management business is democratizing. It is being cascaded now to a larger number of customers and to a more diverse set of customers. So in the countries that we are in, we will see much more growth in wealth management than other businesses that we have.
Mexico is outstanding, but Spain has a lot of potential as well to do more there. And I think we can do much more in Spain and across the border in Latin America.
Do more and do better. Those are the principles driving Luisa Gomez Bravo as she helps steer BBVA into the future. I ask her what she sees when she looks ahead.
What is the opportunity in BBVA over the next decade that excites you the most?
Well, I think it's this challenge regarding digitization and taking that forward and actually really advancing the relationship model with our clients, right? Finding those opportunities of being, a better partner for the clients going forward. That means that we're going to be looking at growing also in corporates more, in other businesses, and in those capital-light businesses. So I think there are plenty of growth opportunities, and I think at the core, it's really the client, right? And how can we accompany the client better to be able for the client to capture his dreams? No?
Hypothetically, let's talk about the opposite there. It's a hot summer night in Madrid. You can't sleep. What's the challenge that's keeping you up at night?
I think that to me, really, it's the speed of change. It's not the change itself, because I said we're accustomed to change. It's the speed of change. And how quickly can we adapt, and how quickly can finance adapt? So it's that speed of change and that time to market against that speed of change that really is more in the background of my mind.
Complete this sentence. The hardest part of being a CFO is?
Prioritizing. Prioritizing externally and internally. So prioritizing externally, meaning that you have to prioritize resources, you have difficult conversations, but internally as well, because you have to manage your agenda. And sometimes you have to prioritize internally as well what you devote time to. So prioritization, I think it's quite a hard thing to do.
Is there an area of knowledge that you would advise a CFO to develop?
I think analytical skills are important. I think more than an area specific of knowledge, because your team should have that knowledge, and if not, you should get a team that has the knowledge. Obviously, you need to like the numbers. If you don't like numbers, then don't go into finance. It's sort of like a recipe for disaster if you don't like numbers. No.
So if I call you up and I say, Luisa, I have great news. I just got promoted to CFO. What's the first piece of advice you give me?
Be cool and be calm. That's what, be cool-headed and be calm. I think that's a good recipe for success being a CFO. Focus on communication, being transparent, focus on learning, leadership. It's your ability to have a view of the forest and being able to deep dive at the tree level as well.
I'm Kriti Gupta. This is Bloomberg.
For Trung Joo Bin, you're never too young to learn AI. That's why he's urging the government for school kids as young as 6 to be taught how to use it.
Within this system, from first grade, they all start with the AI education. They play 4 years, just playing. And then from 5th grade, they start to develop AI by themselves. And STEM and robotics, I see very clearly how Vietnam should be in future. Vietnam just about 100 million people, young people, good education, and latest technology. That's the only way to go. Education not contribute much profit for equity, but from the country point of view, that's most useful contribution, what equity should do. And today we're thinking about every kids, not in cities like Hanoi or Ho Chi Minh City, but kids in the countryside should got the good education. That's what we're going to do now.
So you're leapfrogging.
Yes, exactly.
Addiction isn't a choice.
I would isolate, self-medicate, and fabricate to continue my use.
I didn't really think I had a problem.
Rachel and Pete are just 2 of 48.5 million Americans with substance use disorder. But 3 out of 4 people find recovery is possible with help. Go to shatterproof.org/findtreatment to watch the short film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
The top names at the Fed are on Bloomberg.
We're seeing pressure on the inflation side of our mandate. That's where our miss has been bigger, and it's been lasting for longer. We haven't hit on inflation in 4.5 years. What I hear from people is that the pain of inflation is really biting. And so we have to balance those two sides of our mandates when we think about setting correct policy. And we have to look at if we're missing, by how much, and for how long do we expect those misses to last?
Nobody covers the Fed like Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg. The top names at the Fed are on Bloomberg.
We have a banking system that's a dual banking system. So we have national banks and we have state chartered banks. The FDIC and the Federal Reserve oversee those state chartered banks together with the state banking commissions. It's important that we maintain the ability to oversee both the state chartered banks and the OCC with the national banks, and that we have a rational framework that is very similar for all of those banks going forward.
Nobody covers the Fed like Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Remember, before dialing, listen for dial tone.
It's not like he was proposing to bring back the rotary phone. But when John Stankey became AT&T's chief executive officer in 2020, he sensed the company had strayed a little too far from its roots.
There clearly was a need based on kind of where the investor base was and where performance was to take a step back and say it was time to maybe simplify the business and get it more focused.
America's oldest telecom had grown into a sprawling media and communications giant with the heaviest debt load of any non-financial company in the world. To turn around, it had to slim down.
And when the decision was made that we needed to focus, we started to ask ourselves, well, how do we compete? What are the things we need to do?
What he concluded very quickly is, if we want to be the very best connectivity company, we can't half-step it. We have to lean in. We have to invest a lot more.
Connectivity may not be as sexy as Hollywood, but it's been AT&T's core business since the days of Ma Bell. Stankey needed a partner to help rebuild that legacy on a foundation of new technology. He asked Pascal Desroches to be his CFO.
I said yes right away, but I recognized the enormity of the challenge ahead of us.
When you got here and you looked under the hood, were you surprised by the enormity of it? Were you sort of overwhelmed, or did you feel like, all right, I got this right away?
I did not think I had this all the way. You come in, you have a sense for what the issues are, but until you're actually in the seat and really learning firsthand the depth of the problem and the complexity of the problems, it's hard to fully appreciate.
He dug into them piece by piece and day by day.
One of the things that I think I do very well, I'm pretty good at not making problems bigger than they are. I'm a believer you try to make progress on big problems every day, and ultimately you'll look back and say, hey, you've come a long way.
AT&T has come a long way since Stankey and Desroches teamed up. It's gone from a lumbering, over-leveraged company to a darling of the AI revolution.
That first 18 months was trying to right-size the balance sheet and also making sure we were, at the same time, investing significantly in the businesses to get growth going again. A lot more of my time now is spent on working hand in hand with the operators and making sure I'm giving them resources that they need to execute on the strategic priorities.
Everything in our business is a team sport. It's an operating business. And I saw in Pascal somebody who'd be a really collaborative CFO, somebody who's going to work well with the team and make everybody kind of elevate.
Pascal Desroches brings much more than a head for numbers to the CFO role.
By always looking externally, it allows you to make sure that we are at our very best.
Call it a flair for connectivity.
I've been really blessed. I have such a great team.
He is incredibly patient and has a gift to be able to repeat and tell people things multiple times so that they can build their understanding.
We have honest discussions about what's going well, what's not going well, and we're really transparent about what we're trying to do. Early on, there were skeptics, but over time we were consistent in communicating, this is our North Star, this is what we're trying to do, this is why we think we are on the right track. Over time, we've built an enormous amount of trust, and right now we're seeing a lot of the benefits of it.